right, good afternoon, traders. This is your free video from seasonalswingtrader.com. On the heels of the FOMC meeting yesterday and the rate hike, we turn our attention back to the bond market, looking at the 10-year note and the 30-year bond, the long bond. In particular, the 10-year note right now, we got a seasonal setup that is to occur next week, getting long or buying the September 10-year note contract. This is a trade that's been profitable 13 out of the last 15 years. And you can see here from the charts, we had large movement day yesterday. We're pulling back slightly a bit in today's price action. But looking at the seasonality of this chart here, you can see the 3 and 5 year price averages. We actually tick a little bit higher before pulling back down, before then rising into the projected seasonal trend. This is almost about a 1.5 months, say 45 days or so trade in duration. As you can see down here too, we've got a 10 and 15 year seasonal trend, and we do come back down here into mid-June before popping higher going into early to mid-August. So we're looking at possible trade entries here in either the note or the 30-year bond. If we look at where we are real time, you can see here that we broke out of this little resistance area that we've been watching. Our members have been selling out of the money put spreads on the 30-year bond. We did back here, and then we did back here again, and now we're looking to reestablish new positions and get in for a third time into the bond market. So this is the 10-year note. What we want to do quickly here is draw a simple Fibonacci retracement from this swing high down to this swing low, and you can see that we are right here at the 50% retracement level. This is a huge level here at 126.21 or so, and this is going to be a decision point here. We can see we are back above the major averages. We have broken above the old resistance now, which should prove to be support, and also trading above the short-term trend line. So this suggests if we can maintain a solid close above the 50% retracement level, should get us up to a next leg of here at 127.25, and then possibly up here into the 129 area. Now if we look over at the 30-year bond market, we'll see the same thing. Now we're not quite up here to the 50% retracement level, but same price action here. We finally got up and closed above this old resistance level. Now we'll want to see if we can make that happen again. Let's stretch out the price so we can see it a little bit better. And you can see we're holding those levels today. We're holding right above the 200 as well as this trend line, and we're looking for a next target up here into the 161 level on the 30-year bond. Now if we quickly go over and glance at our moving average heat map, we still have a confirmed buy signal on the interest rate complex. So those are a couple of ideas. In the bonds, we're looking at maybe shorting the 152 put spreads, spread it out as wide or as thin as your risk can tolerate. We'll be looking for breaks of the 153 level as a sign to exit. So hope it helps. Feel free to grab a trial. Click one of the links above, and we'll see you on the inside. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.